How's it guys? Welcome back to FX Rhapsody. Today we're going to be doing analysis on two currency pairs again. We're going to be focusing on the British pound US dollar and then also the British pound Japanese yen. Before we hit the charts, just go visit my website. It's on the bottom left corner over here where you will find previous analysis, previous strategies. For those of you that's getting started in trading, there's some nice categories over there that you can watch, and it will tell you all about what you need to know when you want to trade the Forex markets. Also, preferred brokers, guys, go watch them, go check them out. These guys are brilliant. You need a brilliant broker on your side when you are trading, and then you know that they're reliable and your money is safe. Also, we're doing top-down analysis starting on a daily, moving it down to the hourly. We're using the COT reports, so you can download the COT reports for free on the website as well under the resource tab. All right, so let us hit the charts. So we're starting out on the daily on the British pound US dollar. As I said, we're doing top-down analysis starting from the daily time frame, moving down to the hourly. So on a daily time frame, what we can see is we see this nice movement. I mean, it's towards the end of the month, and then price just this whole month, just basically, or the whole couple of months, just basically, in a nice downtrend. We do see a nice retracement that has happened on the daily time frame. So if you take your Fibonacci from the high to the swing low, we can see a nice retracement all the way to the 62% area. So this is normally the key area where you would want to place a trade. In this instance, you would want to place a sell trade going downwards. But again, we need confirmation if price is going to carry on downwards, or will price from here on start shooting upwards. Okay, so we need confirmation regarding that, especially when it comes to higher time frames. You just need a little bit more confirmation on your lower time frames. So switching over to the 4-hour time frame, well, we can see a nice little buy that happened during this week, and then in that you take out your Fibonacci from this swing low to that swing high. Okay, so it's the swing low to that swing high, and you can see a nice retracement all the way again to the 62% area. For those of you that's not familiar with this Fibonacci retracement or the settings of the Fibonacci, go watch my previous videos regarding Fibonacci. I've made a nice one, I think it was called Fibonacci version 2, where I explain everything on how I trade the Fibonacci, and then also where to place your trades and your exits and all that kind of things. But I mean, this is a nice entry. And then, as you could see, price moving up. From there, it shot up over 600 pips, 650 pips almost, that it shot up. Okay, so that's a nice buy opportunity that you could have had. And then moving down to your hour time frame. Okay, a couple of things happening here. Now, what we normally do is at the end of every currency pair that I do analysis on, I highlight two areas in the market. And then we look for any break of structure or whatever the situation, and then we react to what price is doing. So again, excuse me, price breaking out, coming back up again, and that's where we look at that swing high and swing low on a 4-hour time frame. So you could have caught it nicely, and you'll see it better on the 1-hour time frame, as you can see. So you had your swing low and you had your swing high, and this is just where patience comes in. So I mean, you just be patient, be patient. You could have caught some pips or, on lower time frames, but I mean, be patient. And then, as you can see, eventually, price going into that 62% area. And that is where you could have caught those nice little pips going upwards. Okay, so currently, like I said, it's in the month. Price just, consolidated, finishing off the week, basically, and then finishing off the month on that area over there. So, as I said to you, on a daily time frame, we need confirmation if price is going to be moving downwards, or for a nice little sell opportunity. So let's have a look and see what's happening in this area over here. Will there be a break downwards? Okay, will price break this low over here, coming or starting off this week, or will price carry on upwards? And then whatever happens in past these two highs and lows, all you do is just react to the market. Okay, and again, I've mentioned it so many times that on higher time frames, it could be in a downtrend, and you could see now that it was a nice downtrend move, or on a higher time frame, on a daily time frame, it is, British pound US dollar is in a downtrend. But I mean, I just showed you how you could caught a nice little buy upwards, you know, over 600 pips. So again, uptrend you can catch your sells, downtrend you can catch your buys. So always be aware of that and what's happening on the lower time frames. Don't just get stuck on one time frame. Always look from your higher time frame, just get a bigger picture of things, and then go to your lower time frames and just react to the market. And it all depends on what type of trader you are and the amount of pips you want to catch a day and all those kind of things. So again, this is the end of this analysis on the British pound US dollar. What we do is just look at the COT reports. British pound, what we can see is a lot of longs being opened in the market and also a lot of shorts being opened in the market. And that is why we can see this nice little, you know, just this end of this month is consolidating, you know, price just, you know, indecisive of where it's going to go. So we will have to see if price, like I said, continue downwards or upwards. So let us move on to our next currency pair. We're going to be looking again on the daily time frame, and we're going to be focusing on our British pound, Japanese yen. Okay, so this is going to be our next one. So I'm just going to zoom out a little bit. So I want to show you something. So there we go. So as you can see, we had a big move downwards. Okay, it's a big candle. So I mean, this is just price taking out all this liquidity that's lying on the bottom here. So you had all this liquidity from all these buy areas, price not breaking that area, and eventually price just went down and it tapped into that liquidity slightly. And then after that, it just shot up all the way upwards. Okay, so also just a little area that I want to show you here. So we had a nice break of structure that happened. Basically, I'm just going to do that. That was the closest one. So we had a nice break of structure over there. So there was a nice support area, price breaking that area, and then eventually touching liquidity or tapping into liquidity at the bottom. Okay, right about there. And then price coming up again. So where does it get drawn to it? It gets drawn to its fair value gaps in the market. So fair value gap was created in this area over here. As you can see, that was the break of structure over there. And then the gap in between those two candles, you know, it's an imbalance in the market. So price just gets drawn to that area. And now it's filled that area. So now again, will price continue downwards or will it continue upwards? Okay, so that's going to be interesting to see what's happening with this currency pair as well, or these two currency pairs, just to see what price is going to be doing on a lower time frame. Let's just have a look here. 4 hour. Okay, just plain and simple, you know, price is breaking out this structure as well. So just doing that. So you could see price breaking that area and eventually, you know, towards that, what always happens towards the end of the month is price consolidating, you know, just ranging in that little area over there. Just not knowing what price is going to be doing in this new month. So we will definitely keep an eye on that. Also, when price broke that area, it did create a nice fair value gap, a big one as well. So I just want to show you this. So there, and I'm just going to zoom in a little bit. So let's just do it properly. Okay, so the fair value gap, the imbalance that's created is between that wick, okay, that high of that candle and that low of this candle. And as you can see, price going up, coming down, just touching into that fair value gap area, just moving into that area, and then all of a sudden it's shot up again. So it's just consolidating in that area. So always look out for those things in the market. Okay, so on a lower time frames, that is going to be a buy opportunity that price hit over there. But let's just have a look. Couple of things happening on the hour time frame. Excuse me. Okay, so this is where we ended off last weekend. Okay, so price, we still looked at a high and a low. Okay, so as you can see, price opening and then made a huge move downwards. Okay, and this was the area. This was the move downwards, and it touched liquidity. So, or not liquidity, but I mean, there was a huge move downwards. Then price started shooting upwards. Okay, so where does price go to? You could have caught some nice buy opportunities on the lower time frame, but I'm not going to drill down further with this one. But you could have caught a nice buy opportunity on the lower time frames going up. But where is your exit area with this turning point? Okay, yes, it was by that previous high that we had there, but again, just want to show you this. There's a fair value gap that gets created. Okay, right there. There's a fair value gap in between those two candles. The fair value gap was created when it broke that structure over there. Okay, so I'm just going to take this there we go. Just take this out just to not confuse you. Okay, so fair value gap was created, then price shot down, then price came up, it gets drawn towards that fair value gap area in the market. Okay, so that's an opportunity that you could have caught, exit point, by this fair value gap. Now price started moving downwards. Okay, now as you can see, it goes down. So what do? You take out your Fibonacci. So you have this low over here and that high. Okay, because it was a movement downwards, came up, then another swing low, or a low that it created, and then it created another high. So now you wait patiently again for price to return to this area of the 62. So as price comes down, it hits the 50%. Then it moved up again. So now you take your Fibonacci and you move it sideways and you wait patiently. And again, look at this. Price hitting that 62% area eventually. Always have patience when it comes to trading. Don't just always want to be in a trade. Okay. If you always want to be in a trade, you are going to lose money because you're going to trade setups that's not there. So with this one, again, look at this. Just wait a couple of days and then bam, there's your entry over there. And then price shot up after that. Okay. So I'm just going to show you, because you just waited a couple of days, you could have caught a nice little, look at those pips. Guys, this is ridiculous. Okay. This is just being patient in the market. So you had a price moving upwards. So where's your exit point? Let's say you had a buy on here. So where do you exit? Okay, where does price get drawn towards? It gets drawn towards fair value gaps. Now, where's this fair value gap that was created in the market? If you move sideways, I'm just going to take this out. Look at this. Bam, bam. Okay, there's a fair value gap that was created in the market when price shot down. So as you can see, price not filling that fair value gap anyway, but then you move your fair value gap sideways. You keep highlighting it and look at this. Bam. Exit points. So you had an entry over here. Price shooting up. Gets drawn to the fair value gap. And that's where you have your target area. And then after hitting that, price started consolidating. Okay. So always be aware of these things in the market, guys. I'm not sucking this out of my thumb. I mean, I'm showing you this is what happens. Okay. So always look at those. I'm using Fibonacci. And I'm using fair value gaps, is imbalancing in the market. Those are the two methods that we trade with. So now currently we're looking at this area. Okay. This is now coming towards the beginning of this week, or let's see what happens this week. And we're looking at this area over here. Okay. Those are the two areas that we're going to be focusing on to see if price continues upwards or it will continue downwards. Okay. So, I mean, it's as simple as that. You start off the higher time frames. You just look at what market is doing. Do not focus on one time frame because you are going to get stuck on, you don't know why price is doing it, where price is going and all that. So you start with your higher time frames, you move down to your lower time frames. You look at your hour and even drill down deeper into your 15 minutes and 5 minutes. Those are the time frames that you enter your trades. Okay. So just be aware of that. So that is all from me for today on these two currencies. Oh, let me just quickly, a lot of guys always mention that I don't always do the COT reports on all the currency pairs. But I want you guys to also just, go to my website and then go download the COT report and start using it for yourself. Okay, so I'm not going to do it on this currency pair. Just go download the COT report. You've got it. I'm giving it to you for free. So go use it. Okay. But in any case, that's all from my side. I hope you enjoyed this analysis. And if you did, guys, don't forget to hit that like button. Hit the subscribe button, the notification bell, because there's definitely some more analysis coming your way. And guys, I hope you've been having a wonderful week and a wonderful weekend so far. Stay safe and happy trading, guys.